Well, well, well. Look who proved me wrong. Nike stock, you proved me wrong. Up 10% the day after earnings. Is that crazy? I don't know. I think it's kind of crazy if you think about it. Look at the historical action of this stock here. This thing was one that's been getting hit pretty hard, obviously, as most clothing companies have, down 32% over the past month before this. Obviously, it tells a worse story if you look a little bit further out from highs. They were down nearly 40%. So Nike is one that got hit pretty darn hard. But here after earnings, they've recovered a decent bit of that, actually, if you think about it. So yesterday they rose around 8% in the middle, in the normal trading hour, or over 10%, I believe it was. Yeah, it's close to 17%, actually. That's crazy. So then after hours they were up, and today, now they're up 10% again. So obviously a lot of price movement in the market as is. A lot of people, I guess, buying back into stocks, so you see a lot of movement that way. But Nike, what did they do in earnings? Well, this is what impressed me. Nike, for quarter three, beat by 22 cents on a non-GAAP EPS standpoint, a GAAP EPS in line. 22-cent non-GAAP beat. That's nice. Revenue, up 5% year over year, $10.1 billion. Beats by $530 million. Now that is what I would call a very good quarter, especially for a company like Nike. That's a very good quarter. Those numbers shocked me. I don't think there's any doubt about it. Those numbers shocked me quite a bit. Because you expect, think about it. If we're talking about this pandemic, quarter three for Nike would have hit very hard in China by this pandemic in the January, February timeframe when this quarter was going on. And they still managed to post a massive beat. I say massive beat because, $500 million is quite a freaking beat. That's crazy stuff. So, Nike reports revenue is up 6% in quarter three on a currency-neutral basis, driven by double-digit growth in Nike Direct and growth in wholesale. Converse revenue was up 11%. People buying their skater puke shoes. Gross, don't wear them. Amid the outbreak, Greater China revenue fell 4% year over year, following 22 consecutive quarters of double-digit growth in China. So they did have their first actual drop in Chinese sales in 22 quarters, but only down 4% during a pandemic? That seems insane to me. During the first 2 months of the quarter, Greater China's revenue grew strong double digits, offset by the impact of the outbreak beginning in late January. So all I can say is that's pretty crazy. So hey, what can I say? Gross margin fell 80 basis points to 44.3% of sales to edge past the consensus of 44.2%. Good on that in terms of margin. Margin fell in fiscal quarter three, primarily as a result of the impact of the virus, including a lower mix of sales in Greater China, which Nike's highest margin geography. What? I said that right. I felt like I didn't say that right, but I did. So it's where they have the highest margin is in Greater China, as well as increased rebates to wholesale partners and higher costs related to factory cancellations to manage future inventory. Nike didn't issue any guidance, though, so I think it's a very safe play for them at this point. So when I mentioned this would be a stock to look at for earnings, I did specifically say that forecast would be what really hits this stock. Well, they didn't issue forecast. They didn't issue any guidance at all. So investors just took the numbers they saw and they liked them. So no guidance is an interesting philosophy if you think about it. I don't know. My guess is they likely will issue some guidance, maybe even quarter or two into the actual quarter, a month or two into the quarter, potentially. Or they might just go the whole quarter without guidance. But I think once this outbreak has settled down for the most part. I think that they will finally issue guidance once they actually realize what kind of an impact they can have. It's hard for them to give guidance when really they don't know the total impact of what we could see worldwide, especially as the U.S. is just now getting hit pretty hard. But Nike is confident on recovery plan. It says it will follow a playbook established by the company in China as it looks to recover its business in other parts of the world. Nike noted that nearly 80% of the stores in Greater China are now open, and digital sales in China are approaching triple-digit growth as pent-up demand is unleashed. The company says it has already taken what it learned from China and used strategies in Japan and South Korea with the aim of returning sales growth. Interestingly, Nike's comments on the recovery bid in the U.S. and Europe after going through the China experience were remarkably similar to what Starbucks CEO Kevin Johnson said earlier in the day about the global coffee chain's plan. Cool stuff. So let's get into some of these numbers. Take a look at Nike. See if there's some Spumoni fun stuff to look at. Spumoni, don't know why. But you do see a digital sales growth of 36%. Very good for Nike. Not a company you necessarily expect to do so much on digital, but here they are doing a lot on digital. Very cool stuff. Let's find some other great stuff. I like to see great stuff, but obviously, John Donahoe. Oh, I can't say that. Donahoe. It could be Donahue. I don't know how to say his name. Why do I not know how to say CEO's name? That sounds absurd to me. I apologize for such a thing. But he says that as we start to see recovery in China, no one is better equipped than Nike to navigate the current climate. So, obviously, very positive words. They're not going to give negative words for sure, but positive stuff. We'd like to see that. What can go on there? So, as far as an update they give, so operations in Greater China were materially impacted in the third quarter. So during the first 2 months of the third quarter, revenues were growing, as we mentioned before. Beginning March 16th, all Nike-owned stores outside of Greater China, Japan, and Korea were closed to help curb the spread of the virus. Now they're 80% up, so good for them. So you'd like to see that. What else do we like? Sportswear and the Jordan brand continued growth. Love to see the growth, and obviously the Jordan brand. I mean, everyone loves buying their Michael Jordan shoes. I don't personally, because I don't spend that much money on shoes. Sorry. Converse was up 11% though, off of their growth shoes. Did not mean to say that, so that feels rude to me. But I said it, so effective tax rate was 3.9% compared to 14.7%. Can I get tax rate that low? Gosh dang. But it was due to a shift in proportion of earnings taxed in the U.S. and increased benefits from discrete items. Net income decreased 23% to $847 million. Obviously, interesting stuff. You see a decrease in EPS and a decrease in net income, no doubt. But that's not a bad statement. Not a bad thing. I don't know why I couldn't think of the word, but not a bad net income line for sure. From a balance sheet review is what they give at least. So inventories were $5.8 billion in inventories, up 7% year over year. Obviously, as I said, they're going to be holding on to a lot more inventory. That was my thesis, really, of going into earnings here. I knew they'd be having more inventory than they did before, and you'll see that position increase a little bit as well, no doubt. So nothing too crazy. From a cash and cash equivalents perspective, they got $3.2 billion, which is $864 million lower than last year, as share repurchases, dividends, and investments in infrastructure more than offset proceeds from net income. From share repurchases, they repurchased 9.6 million shares in quarter three. The $15 billion program approved by the board of directors on June 2018. As of February 29th, they totaled 443.3 million shares being repurchased, approximately $3.9 billion. And that's out of $15 billion. So they're not even a third of the way done with that repurchase program. Crazy. You just like to see that. Tables follow, as we see. Now let's get into really the nitty-gritty of this balance sheet and call it a wrap. So from a cash equivalents perspective, $2.8 billion in cash versus $3.7 billion last year. Quite a decrease there. Overall, from a total current assets perspective, though, you really don't see much of a difference, all things considered. So they made up for that difference, no doubt. So definitely interesting to look at because obviously they have higher inventories and prepaid expenses. Total assets of $26.22 billion. Now, from a liabilities perspective, so can you just take a look at this debt line? I mean, total current liabilities of $8.2 billion versus a total current assets of $15.7. They've got double the assets that they do in terms of liabilities. Very cool. From overall, if you think about it here, total long-term debt of $3.4 billion versus obviously they have a lot more than that in terms of total assets. They could pay off nearly pay off that long-term debt right now if they wanted to, really. But really, this is a company with a very good cash position, in my opinion. I think they're well poised for the environment that they're at, and I do think the CEO's comments were warranted. Nike is an interesting stock right now, obviously after a recent drop, but now it's shot back up. So one to take a look at for sure. I'll be interested if they show guidance, though.